Hello, everyone. Today, me alongside my team will be debating whether Chinese economy will not slow down and will continue to grow at high rates. According to official data from the World Bank, the GDP or gross domestic product in China was worth 14,722 billion US dollars in 2020. China's GDP value represents 13.04% of the world economy, and it is expected to reach $15,600 billion by the end of 2021, $16,700 billion by 2022, and $17,400 billion by 2023. Following real GDP growth of 2.3% in 2020, China's economy is projected to grow by 8.5% in 2021. In relation to trade, in August 2021, China exported $347 billion and imported $236 billion, resulting in a positive trade balance of $111 billion. Between August 2020 and August 2021, China's exports have increased by 92.6%, from $180 billion to $347 billion. All these exports were mostly made to the United States, Hong Kong, Japan, South Korea, and Vietnam.
Economists generally attribute much of China's rapid economic growth due to two main factors: large-scale capital investment, usually financed by large domestic savings and foreign investment, and rapid growth productivity. These two factors appear to have gone together hand to hand and will undoubtedly continue to be effective for the years to come. Even with the pandemic situation that is economically hurting all the countries around the world, China's economic growth has returned to its long-term growth trajectory. Economists observe that there's a shift in the Chinese economy, from growth driven by public investment and net exports during the first phase of recovery, toward growth very much driven by domestic consumption and private investment. Thanks to that, they noticed in 2022 growth will likely be declining to a 5.4%, returning to the path the country was on over the 5 years leading up to the pandemic. The new Silk Road is an enormous Chinese international development project. It's a trade network that involves Asia, Africa and Europe, and more than 70 countries are already involved. It may turn the old world order upside down. China is investing in bridges, port facilities, railroads and roads around the world. Beijing is spending several hundred billion euros on what it calls the Silk Road Economic Belt. Chinese President Xi Jinping says that the project will provide development opportunities and wealth for China and the entire world. Beijing will take the role in building this infrastructure network. After the financial crisis in Greece, no European country wanted to invest there, but China saw an opportunity and bought shares in the port of Piraeus. By 2016, Beijing owned a majority of shares. The Greek Dock Workers Union still finds it hard to accept that the port no longer belongs to Greece. In 2019, Italy joined the Silk Road project and assigned a memorandum of understanding with China on the development of the port of Trieste. But critics warn that the Silk Road project will allow Beijing to spread its influence around the world. Europe is divided between those who favor such cooperation and those who oppose it. In 2019, China exported silk with a value of $597,000.44 million US dollars.
China's economy risks slowing faster than global investors realize, as President Xi Jinping's push to cut its reliance on real estate and regulate sectors from education to technology, combined with a power shortage and the pandemic. McKinsey Global Institute, a think tank of the American consultancy, says that China is the market that has exerted the most capacity to attract the generation of wealth so far this century, ahead of the US. Since China, it has raised its stock price of wealth from the 7 billion it registered the year of its accession to the WTO in 2001 to the 120 billion with which the exercise of the Great Pandemic has been culminated in 2021. And it has gone from representing 1% of global merchandise flows to almost 15%, and it is the only market in double digits. Also, that leads the artificial intelligence. Chinese companies hoarded patents, and the Beijing regime invests billions of dollars in artificial intelligence projects. In addition, it holds a third of the business unicorns of all the world. Neither the Fed or the ECB seem to be concerned about the impending slowdown in China that some preach. If the popular narrative of a very bearish scenario for China were true, financial asset prices would begin to anticipate such a scenario. And yet so far, there has been almost no repercussion outside of China. Since the beginning of the pandemic, China is 7% of GDP ahead of the US and about 10% ahead of Europe. So why can't the Chinese economy make a stop so that it can then run hard for longer?
Now, if we compare China's economy, we know that China is set to overtake the US as the world's largest economy in just a few years. Because the US reported last week that the gross domestic product in 2022 contracted by 2.3% to 20.93 trillion. Now, in contrast, China estimated that its GDP expanded by 2.3% last year to 101 trillion yuan. Now, that's about $14.7 trillion. And this is based on the average exchange rate of 6.9 yuan per US dollar. That puts China's economy at only 6.2 trillion behind the US. So every time it's getting nearer. We believe that the one reasonable growth projections, the size of China's economy in US terms, will overtake the US in 2022. Now, if the Chinese currency strengthens further to around 6 yuan per US dollar, China could surpass the US 2 years earlier than anticipated, around 2026 instead of 2028. Now, the yuan has begun strengthening against the US dollar in the last 6 months to levels never seen before in the last 2 years. And the unemployment rate in China has lowered to 4.3%. You might think this is a high percentage since Germany and Japan unemployment rate is around 3%, but it is important also to take into consideration the size population that differentiates these countries.
Okay, China's economy at the moment is slowing down. We can see this because the growth in the first quarter of the year was of 8%. From July to September, it dropped to 4.9%, which clearly shows that it dropped down. But however, I don't believe they're going slow at all. I think the economy is growing pretty fast still. And the lessons of the economy growth of China continues to grow rapidly, and it will need to invest further on human capital and ensure there is a stable and predictable legal regime. China's education system is not considered one of the best in the world, so which means that if they develop this sector, they can continue to grow at high rates. And they also have a huge advantage in terms of technology that they can use to continue growing really fast. And finally, they have mineral resources that can help them to produce microphones and screens. They have the most resources, which means that other country depends on them to be supplied. I think if we just take into account all these factors, I think China is going to continue to grow really fast.